The more transparent banks are about their C&E risk profiles and their concrete efforts to align their portfolios with the Paris Agreement, the easier it is for market participants to compare banks, to reward those which are taking the necessary steps to adopt risk management practices aligned with the carbon neutral economy, and to re-evaluate those with misaligned trajectories.
We have been doing this for a long time. We have started climate action when we put it as a top priority, one of the top priorities of the bank already 15 years ago, so it's not exactly a new thing for us. What is more recent, though, is talk about adaptation finance. And this was, for example, one of the main commitments that we made in Glasgow to increase substantially our financing for climate change adaptation, i.e. resilience for the damages that are already done. We have also been attaching a lot of importance in measuring the impact of the financing that we do. So not just the billions of financing that go, but what is the impact? So we have been measuring, for example, the carbon emissions saved, both in relative and absolute terms, for many years. And publishing those numbers in audited format also for many years. And I think we are probably the only, at least multilateral, who does this. We have to look at the rest of the business of our counterparts, not only the one investment that we are financing. And this is so that we can address legitimate concerns from various stakeholders, so that we are not supporting greenwashing by providing finance to some project that somebody does with their, 2% of their capex, and then otherwise continues to engage in activities that can't be reconciled with the Paris Agreement objectives, for example.
So first claim, we need to think this as a process. Why? Because it's really very difficult. We'll get into some of the technical challenges, and it will take a while. Now to the second claim I'd like to make, it is really key to understand the forward-looking analysis. It's not about the emissions only, that, the emissions of the past of a company, but it's really about the consistency of whatever we are doing with that net zero, the path towards net zero emissions.
You mentioned in interviews that the ECB will not insist that banks get rid of climate risk, but they basically manage it, disclose it, yeah? So does it concretely mean that you will not ask banks to divest the so-called brown industries? And then also feeding in a question from the audience in the Q&A tool, what kind of enforcement will the ECB undertake in relation to all of these guidelines and demands that you have been highlighting right now?
It's, of course, a very fine line. We are not bankers. We are not the private sector. We do not sit on the chairs of the boards of the banks. And neither should we. That's not our role. So others need to make investment decisions. Others need to make climate policies. We are climate policy takers. What we are on earth for is to make sure that banks manage all their material risks. And we have come to understand, without any doubt, that climate and environmental risks are material. They translate into financial risks, they translate into all the existing risk categories, and they are material and they must be managed. More generally, banks are about risk taking. They are about credit risk taking. So we cannot, and we have not over the decades, never said that banks should not take any risks. They should take risks in a measured way, in a mitigated way, in a way that is in line with their risk appetite, and their risk management capabilities should be in line with that, and their capital should be in line with that. We are saying to banks, you better pay attention to the fact that this world is changing, and this world is changing fast. This world is becoming increasingly a Paris-compatible world, and you will have to be profitable in that Paris-compatible world. How are you going to do this? How is your strategy going to be aligned with this?
So I wanted to ask also Eila one question in relation to, let's say, the EIB's experience with realigning portfolios, setting new risk appetites, developing mitigation strategies, adjusting in qualitative credit criteria, in the context of the Paris Agreement. What is your experience, how it works? And I mean, we have heard that other banks will have to do the same thing, of course. So what is, let's say, your experience from basically being a step ahead already in this process?
For a public bank, I think it's a slightly different thing because we get, for example, our capital from the governments. So it's not an infinite resource which comes in if we just make a good return on investment. We are supposed to do the public good. So for us, this transition has started already like 15 years ago. So it has not been quite as rapid a change as it may have been for some commercial banks. And because our criteria, what we do, are slightly different, we don't go after the profit maximization at all. It's with the public good, as I said. So, but of course, it has meant building quite an elaborate framework on how to assess the risk for clients, for projects, for all the aspects, not just looking at one thing, but taking like a 360-degree review on things.
Your first point was that, correctly, we are in the middle of a process which is kind of limited by specific regulatory and supervisory constraints. In your view, what is the expected time in which you would see that we would reach a steady state with regard to the transition to a new situation?
I think the challenge that we're seeing here is that we are in a transition, which is like a structural change process, where the whole challenge of this is closely related to the fact that this is not about a steady state, but rather about sort of moving the steady state, if you want. So you want to have a stable transition. So the time horizon for getting it all done is very, very long because there's so many challenges here. I would rather consider this that the different challenges will need to be met on different timescales.